Not bad.
Hello, everyone, and welcome back to another brand new episode of Tax Thursday. I am your host, DDQ, here with Smart Counsel's tax resident attorney, Ms. Dionne Kellier. Happy
Hey.
Tax Thursday, Dionne.
Happy Tax Thursday, Dee.
How's your week going?
My week is going good. Can't wait for it to be over.
I know next week's already Thanksgiving, which is crazy.
You know, it's my favorite time of year.
Like, this is where you thrive.
This is where I thrive. This is where I start to get my stride.
Right. Awesome. Thank you all so much for joining us for another episode. Smart Counsel is a minority and woman-owned firm. Visit our website at www.smart-counsel.com to learn more about each attorney and their practice areas. On today's episode, we will be talking about a research and development tax credit, what that is, and who can benefit from it. So as we do with every episode, let's start off with the definition of research and development tax credit. AKA R&D is how we'll refer it. So we're not saying all these words.
Yeah. All right. So the R&D tax credit is available to companies developing new or improved business components, including products, processes, computer software, techniques, formulas, or inventions that result in new or improved functionality, performance, reliability, or quality. And it's available at the federal and state level, with over 30 states offering a state credit to offset state tax liability. And so when you hear it, you're just thinking it's like only connected to one thing. So the R&D credit eligibility is much broader than many companies realize, applying not only to product development, but also activities and operations such as new manufacturing processes, software development, and quality enhancements. Startups may also be able to apply the R&D credit against their payroll tax for up to 5 years. And so your organization could be eligible for an R&D tax credit if it devotes time and resources to creating new or innovative products, improves existing products, develops processes, patents, prototypes, or softwares, and hires designers, engineers, or scientists. And the R&D tax credit can also be retroactive. It could go back 3 years, back 3 or 4 years. And why it's the 3 or 4 is because, like, say for instance, like right now we're in year 2022, but we're in tax year 2021.
Right.
So that's why it's the 3 or 4 years, and it can go, you can carry it forward 20 years.
Okay. So I guess, who does this really apply to? I guess just like companies who are researching and developing new things.
Yeah. So, okay. I have like I have a list of like the different industries that it could apply to. And so I'll say like this. So a perfect example in my mind, you know, like Hanes has t-shirts and boxers for men, right? Yeah. So we're talking about the men. But now they have this, is it the wick or the wet technology? It has a little like raindrop on the front. And so it's supposed to soak up whatever body heat. It's for men that like, or men exercising, men working outside, whatever. But Hanes has been around for so long.
Yeah.
Just doing t-shirts and boxers and, you know, maybe like joggers. But now in getting to that new technology, getting it out to us, they were able to get the R&D credit. I haven't seen their stuff personally, but if they didn't take advantage of it, they need to call me so that I could I could look them up.
Help them out there.
Right. So yeah,
Interesting.
it's that kind of situation. Mm-hmm.
My question with that would be, because, you know, it's been developed recently, would that mean that they can now just start doing that, or they can go back a few years when they started the research and developing of it?
They can go back three to 4 years, 3 tax years, 4 traditional years.
Okay.
And then if they don't have enough income to offset whatever it is they'd be deducting, like say that they made 50 million, but their R&D was 100 million. And so they'll have 50 million that they can like credit. They can carry it forward 20 years. Or if, you know, 3 years ago, they started developing things and they were paying, you know, taxes, they can go back and have their tax returns amended and apply the credit.
Nice. Very nice.
Yes.
Okay. So I guess what would be, what would be the requirements to apply for this?
All right. So we're going to get there. So let me, so it's a dollar for dollar tax credit savings that directly reduces a company's tax liability. There's no amount on the amount of expenses and credit that can be claimed each year. If the federal R&D credit can't be used immediately or completely, you could carry it for 20 years. And it regularly provides a wide range of businesses with a source of extra cash, up to 10% of the annual R&D cost purposes, and much more when the state credits are factored in. So in order to be eligible for the R&D credit, so there's a 4-part test, and any company that encounters and resolves technological challenges may be eligible for the R&D credit. That said, it depends largely on whether the work a company does meets the criteria established by the 4-part test. So part 1, a qualified purpose. The purpose of the research must be to create a new or improved business component resulting in a new or improved function, performance, reliability, or quality. A business component can be a product, a process, computer software, technique, formula, or invention. And a broad definition applies it's a broad definition that applies to many industries. The next, there has to be an elimination of uncertainty. So the company must demonstrate it has attempted to eliminate uncertainty about the development or improvement of a business component. Uncertainty exists if the information available to the company doesn't establish the capability or method for developing or improving the business components or the appropriate design of the business component. Many companies are confident in their ability to achieve technical objectives or have an established method for finding solutions, but the design is seldom established at the project's onset. The process of experimentation. A company must demonstrate, so 3 is the process of experimentation. A company must demonstrate through modeling, simulation, systemic trial and error, and other methods that it has evaluated one or more alternatives for achieving the desired result. Some activities naturally follow an iterative trial and error process. For example, engineering software development or clinical research activities all rely on a process that can evaluate one or more alternatives, and the definition is also broad enough to apply to many other types of activities. And the 4th test is technological in nature. The process of experimentation must rely on the hard sciences such as engineering, physics, chemistry, biology, or computer science. It's important to note that the companies aren't required to exceed, expand, or refine existing scientific principles, and a company should review its operations for eligible activities, and they could claim the credit, but they also have to be prepared to identify, document, and support their qualifying R&D activities. And so there was a case. Let me get to the case. There was a case. It's called Seymour Milling Company versus the Commissioner of the Internal Revenue Service. And in 2019, the tax court just said you lack sufficient evidence, sufficient documentation to support the R&D credits that you claim. So the court disallowed over $235,000 in R&D credits claimed by Seymour Milling during tax years 2010 and 2011. And this disallowance was due in large part to the taxpayer's failure to retain and provide supporting documentation demonstrating how the company's activities met all 4 tests necessary to constitute qualified research expenses. Seymour Milling claimed that the expenses from the activities related to the development of new flour products and improvements to its production line qualified for the R&D credit. However, the company offered no documentation to demonstrate how the activities constitute experimentation in the scientific sense. The court found that the taxpayer simply stated it was involved in a new product development involving technical activities, but these were conclusory statements and insufficient evidence on their own. And simply reciting the steps that you undertook to get to your process isn't enough to show the IRS that you've undertaken a methodical plan involving a series of trials to test your hypothesis to develop new processes or products. And let's see. So the tax court basically said you need solid evidence, permanent evidence, right? In order to support your application for this R&D credit. So there's an IRS form 6765. It asks you 1,000 questions, but that is the form that you use to claim the credit. And so what I would do is I would make sure that I have this form and then everything to support the entire process. I would scan it to a permanent file and have it there so that in the event the IRS ever comes back, because let's say you're going to carry this credit forward 20 years and on the 19th year, the IRS is like, wait a minute, we don't think that you should have gotten this credit. you, the taxpayer, it's on you to prove that you deserve this credit.
So you don't provide all that evidence at the time of filing for the credit. It's more of like having everything together just in case you do get audited.
Just in case you get audited.
So
And
did in that case, did that Mills not have
no,
the evidence? Oh shoot,
they
no.
just said, I mean, so like, so look at it from their perspective, right?
Mm-hmm.
They developed a new process for flour. And
Mm-hmm.
now look at this new process. Look at the flour. So maybe they went from being able to produce 10 buckets of, flour to 10,000 buckets of flour. And they're probably like, look, we created this method and it's, tripled, quadrupled, whatever our output. And it should be evidence in of itself. But with the IRS, you have to remember they are not in your industry, right? So something
Yeah.
that is in your industry that totally makes sense, because like anybody else in the flower industry is gonna be like, oh my God, this is amazing. Look at what they
Right.
did. We can never do this. The IRS, they don't. If you get lucky to get an IRS, I don't even know if it's luck, right? Get an
I know.
IRS agent that was in your industry, then
Mm-hmm.
maybe they would understand like, okay, this is something that's innovative. But I also feel like if you get somebody from the IRS that's also from your industry, I don't know what kind of temperament they would have. I feel like they'd be pretty fed up with most of life.
Right. No, definitely. That's kind of sucks for that. So what ended up happening with that?
They
Is
didn't
it
get the
C?
credit. That the 235,000 in 2010 and 2011, which is a small number compared to a product. I'm sure that their bottom line was a lot bigger, and I'm sure that when they developed new processes, they documented it from the beginning to the end, from the ruta to the tuta.
Right. Right. So it kind of sounds like this credit really applies to like sometimes like the food industry, a lot of technical
You'll be so
companies.
surprised what industries that it applies to. That's going to be at the end. I want to get to it because I was even surprised at the list, right?
Interesting.
Right? So,
Yeah.
okay. So let's get to this. Let me finish the slides and then we're going to get to the list because, of course, it applies to the apparel industry as well. And you know I love clothes. So, all right. So, there are, let's see. There are 5 reasons companies don't think that they qualify for the R&D credit. So
Mhm.
number 1, if your organization isn't paying federal income tax. So startup companies and small businesses may be eligible to apply up to 1.25 million or 250,000 each year for up to 5 years of the federal R&D credit to offset the federal insurance FICA portion of their payroll taxes. So federal withholding, Social Security, and Medicare. And to be eligible, the company must meet 2 requirements: have less than 5 million in gross receipts for the credit year, and have no gross receipts or interest income dating back more than 5 years, which makes sense because you have 3 to 4 years to apply it backwards and 20 years
Right.
forward. It's the R&D credit is calculated on federal income on your federal income tax return and can be used to can be applied against payroll taxes starting the quarter after the credit is elected. And let's see, the company isn't focused on R&D, which is to me was the biggest. So when we get to the list of like all of the industries that it could help, this to me was the most, like, it stood out the most because the company isn't focused on research and development. So it's not
Right.
only high tech or life sciences companies with dedicated research departments that qualify for the R&D tax credit, but it's wherever the experimentation occurs, research and development can be found. Another misconception is that the employees aren't degree holding engineers or scientists. Companies with large numbers of engineers and scientists stand out as prime candidates for the R&D tax credit. But experimentation performed by employees and third-party contractors who engage in the improvement of products and processes may be included. And like, so in my mind, I think of people that work in like the landscaping industry. And
Mhm.
like there's people that like they may not be formally educated, but like they're good with their hands and they can figure things out. And so, the person that knows how to improve the weed whacker to make it safer because they're out there, they've seen things that
Mhm.
have happened. If that person, changes the product and improves the product, that would count as an R&D. I mean, it's just more of
Right.
tracking it. I would think
Yeah.
more of a small business. And even my I know somebody who's their house cleaner. Her husband he developed a thing, like a circular thing that is almost like the circular saw, but it's a cleaning thing on the end.
Ooh, nice.
Right. So I would think something like that. Let's see. Another misconception is the company isn't developing anything new. It is the R&D doesn't have to be new to the industry. It just has to be new to the company, which has to meet the 4-part test. And the company is subject to alternative minimum taxes. Well, corporations are not subject to the alternative minimum tax anymore because of tax reform. And so all these misconceptions, if you are developing something new, try it. Well, and you meet the 4-part test. Then right. I feel like you should apply for it. Let's see.
And for this like new stuff, I know you said it doesn't have to be new to the industry, but it has to be new to your business. Mm-hmm. Does that mean like new, like into applying it, or you have to be the business that makes up that, like, you know what I mean? That like creates this whole new technology, just like how your friend with the sponge.
I think you have to be the business for your business to claim it. You have to be the business that creates the technology, right? Because you're going to hire staff, you're going to do testing, you're going to have all these expenses in order to get this new technology that may apply to your clients. Like you may have an end user, but if you develop it, everything that it took for you to make that product, almost like cost of goods sold. And why I think it would be the company that is not your end user, but the company that's developing it, is because you're going to get paid by the end user, and you want to be able to make as much of it not taxable income.
That makes sense. Okay.
All right. Let's see. Because the R&D tax credits may be claimed for both current and prior tax years, companies can benefit from documenting their R&D activities, so they're well positioned to increase the amount of credits claimed. The taxpayers must evaluate and document their research activities contemporaneously to establish the amount of qualified research expenses paid for each qualified research activity. And while taxpayers may estimate some research expenses, they must have a factual basis for the assumptions used to create the estimates. And examples of the contemporaneous documentation include payroll records, general ledger expense details, project lists, project notes, lab results, email, and other documents a company produces throughout the regular course of business. And the records combined with credible employee testimony can form the basis of a successful R&D credit claim. And for taxpayers already claiming the credit and those who may want to determine eligibility, it's critical to be thorough when calculating and documenting research activities for R&D claims. So before I even talk about how tax reform changed it, I want to talk about the industries that the R&D credit applies to, because I just think it's so good. All right. So aerospace, defense, and aerospace and defense, right? I feel like that's pretty, like we would think so.
Yeah, exactly.
Right. But then now agribusinesses. So any agricultural business. And you could hybridizing during the development of new strains of crops, plants, or livestock. So you think in the marijuana industry.
Yeah, I was just going to say marijuana, hemp.
So I would say that the marijuana industry should not claim the credit until marijuana is not federally illegal, because that is going to be the basis. Even if you've documented everything in the world times 10, if something is federally illegal, you then cannot make a claim to have federal, to get federal benefits, right? So hemp, CBD, anything under that 0.3% THC. Improving harvesting techniques to increase your yield or production efficiency, developing or implementing automated processes, developing or implementing new ways to protect crops from disease or insect pests, developing and implementing new irrigation systems, or developing new or improved packaging processes. So that makes sense. Apparel. To me, I didn't think that, I guess until I thought about I didn't think about apparel and that Hanes example until I saw this list. I was like, oh, okay, well, apparel. Okay, I guess that makes sense. New technology. So for apparel, developing new clothing innovations that could be eligible for utility patents. So that moisture wick, it's called moisture wick technology. Designing and developing product and performance specifications for new fabric and material construction technologies that using hemp for clothes. Developing new manufacturing processes, manufacturing, evaluating and testing samples and prototypes, developing new software that allows customers to view inventories, make purchases, and track merchandise online using web or mobile applications. Like, to me, that is huge. There are so many people especially during COVID, that came up with some very innovative things.
Yeah.
And I feel like they could claim the R&D credit, right? But then we go back to people don't plan and they just do things, right?
Mm-hmm.
But if you planned this, then you would be able to start documenting from the beginning so you could claim this credit. So I just, I'm hoping that people are watching, our Tax Thursdays, and they're like, you know what? Before I jump head in and I invest all this money, let me just kind of have a plan. I'm not even talking about a business plan. Have a 5-year plan. Have a mental plan so that, you can take advantage of anything that is, coming to you. Because imagine you start the business today and in 3 years, you're like, man, you hear this. For some reason you stumble on this, and you did not track any of your R&D up until this point, and your R&D was probably like, $100 million, $10 million, $1,000, $100,000. It doesn't matter. You're unable to take advantage of it because you were not documenting. You're not going to be able to pass muster if the IRS audits you. And in my opinion, it is not worth it. If it's not worth it to like roll the dice and hope that they don't, come after you. Another industry, the automotive industry, clean technology, communications and media, designing and developing new or expanded network architecture and technology, designing and construction of physical networks, including copper and fiber optic network cabling and wiring, developing telecommunication networks to serve customers, for example, integrating voice, message, or voice over IP capabilities into a web mobile application, developing software technology to improve transmission capacity, developing network tools to monitor and measure network performance. In the construction industry, food and beverage industry, forest products, which will kind of be in the construction industry, in the healthcare industry, life sciences, that's pretty standard. Manufacturing and consumer products, so engineering and designing new products and processes, improving the design of existing products, improving manufacturing or production processes, developing special tooling and equipment used in the manufacturing process, and designing, building, and testing prototypes. I mean, to me, that sounds like any business can fall into that.
Really? Yeah, that's what I was kind of thinking. I'm like, there's no like big boundaries.
Right.
My only question would be like, is there a company that's too big or too small that can apply for the credit, or does it not even matter how much you're making? Or
I don't think it matters how much you're making, because there are certain monetary thresholds to make certain claims, but outside of being within that monetary threshold, and we'll go back to the slide on that, you can, if you don't meet that monetary threshold, there's another one that you can meet, right? So yeah, we'll talk about that. Professional services, if you have computer aided designs or building information modeling activities, I don't even know what that is, but just professional services in retail, technology, and in wineries and vineyards, which is my favorite places. Like, you can get all of these R&D credits, and most people, they don't know until it's too late.
Yeah, but they can always go back.
They can always go back to 3 years, but you can only go back if you properly documented. If you have no documentation and you just let, because one thing I know is that people that have that mind that develops things, or they're artistic, like they see the world abstractly, they're definitely not documenting it, right? Like, because they're the talent. Like, they are there to do what it is that they're going to do. They don't care. They may know the calculations to get you where you need to be, but all they're concerned about is like developing this process, like the irrigation listen, we've met plenty of the farmers in the marijuana industry, and they are only concerned with farming their babies, those plants, the lights, the sun, the soil.
So
Like
true.
they don't care about anything other than that.
Right. So true. So
Yeah.
let's say that I'm a company. I have developed something, done my research. I did document everything. I applied for this credit. So just kind of going back towards the beginning, depending on how much that, what would that amount be, that credit be exactly? Is that the 250 that you said?
So okay, so the 250, so it's a dollar for dollar. So whatever you spent on it is
Mm-hmm.
what you are able to deduct. That 250 or that 1.25 million, if
Yeah.
you're a startup company and you didn't make any money yet, but you did
Okay.
all of this research and development, you are able to do 250,000 for 5 years or 1.25 million to help you lessen the hit of your payroll taxes. So so your net income is going to be lessened because you're going to have, all right, I paid these employees a
Mm-hmm.
hundred, we'll call it $100, and my federal withholding was $25, right? So you are paying $125, but you're paying 125 out, and then you have $75 in R&D. That means that you would have $50 worth of taxable income, right? Because the 125 minus the 75 equals 50, and that would be
Mm-hmm.
your taxable income. So dollar for dollar,
So yeah, you really have to keep track of everything.
everything.
That
Yes.
makes sense.
And let
Wow.
me just talk about how tax reform changed the R&D credit. It didn't change it much, other than it increase in credit from decrease in tax rates. So the tax rate, the highest tax rate for businesses used to be 35%. For corporations used to be 35%. Now it's 21%. So that's what that means, right? So prior to tax reform, taxpayers couldn't take a deduction under IRS Code Section 174 equal to the amount of the R&D credit. This prevented companies from getting a double tax benefit, and taxpayers were required to reduce their R&D expenses by the amount of the credit. The reduction in expenses created an increase to income and any corresponding taxes. Now, taxpayers could avoid the reduction of their research expenses by electing to take a reduced credit in accordance with IRS Section 280C, which was retained in the tax reform and calculated using the maximum corporate tax rate. But because the maximum corporate tax rate is now 21% and the alternative minimum tax was eliminated, taxpayers actually see an increase in credit. There is one limitation though. The rule, effectively known as the 25-25 limitation, restricts taxpayers with over 25,000 in regular tax liability from offsetting more than 75% of their regular tax liability using the credit, right? So you can't get 100% tax credit if your tax bill is above 25,000, but if it's under 25,000, you can get 100% deduction in the current year. Um, let's see, you are able to retain the eligible small business credits. You also get the payroll credits and the yeah. Let's see, what's the and that's basically it. Tax reform didn't change it much. And
Mm-hmm.
one thing that I feel like is very important is that expenses incurred for research performed outside of the United States will be charged to a capital account and deducted over a 15-year period. So after 2021, companies will no longer be able to immediately expense costs that are treated as specified IRS Code Section 172 research expenses. Instead, they'll be required to charge based research companies U.S.-based research expenses to a capital account and deduct them over a 5-year period. Expenses incurred for research performed outside of the United States will be charged to a capital account and deducted over a 5-year period. It's not the R&D credit; it's the research credit. It's a little bit different. So that's why they
So
were
with
saying
that,
that. Go ahead.
go ahead. I was just gonna say, is that better for a company? Is that like
I think,
a
yeah,
benefit?
because you were not at one point you were not able to do the R&D credit
Uh huh.
and the research credit, which is Section 174. So
Okay.
tax reform eliminated that. So now if you're going to get the R&D credit, that you
Mm-hmm.
could eliminate immediately based off of, that 25-25 limitation. Other than that, is dollar for dollar. But if you're also going to do the Section 174 just research, and especially if it's outside the United States, because you could do research that didn't lead to any development, right? So
Right.
you are able to deduct that over what did they say, the 20-year period, the 15 years if it's outside of the United States, or 5 years if it's US based research.
Nice. That's awesome.
That is like scientists, they do get a lot of credits. And I mean, but like their work, my sister is a scientist actually.
Oh,
And
really?
like, I don't think I don't want that job.
No, thanks. I'm not the best with research.
I'm like, all right,
Always
got it.
too much reading.
Right. So, so yeah.
Awesome. Okay, so what would you say would be the big takeaways from this topic with research and development tax credit?
I would say don't ever cut yourself short. If you feel like you're on the breaking edge of discovering something, track your activity, track your costs, because eventually it will pay off and you will be able to claim the R&D tax credit. And I would say if you have any questions, if you're in the process of developing something, and say like you are in your first year of developing something and you just heard this, you can, maybe there are things that you can recreate, because I feel like in your first year you're able to like make adjustments because you can recreate it, and you have to have a hypothesis, and you have to be clear about your intentions, right? Everything that you're going to do, have a plan. And that's just, how I feel about that. Have a plan. If you feel like you see sprinklers and you're like, man, I could do this better, and you really start to put action towards that, document it. How much it costs, how much time it takes, what you're doing. Are you removing the screw in here, or you're removing the screw out there? I don't even know if it has screws, but you know what I'm saying. Like,
Right. Yeah. Document everything.
Yeah.
Okay. Cool. I mean, I feel like that's kind of like the big takeaway with all of our topics, because it's the IRS. They want to see paper trail. They want to see receipts, of like everything. So yeah, definitely track everything, even if you're on the brink of something. That's good advice. And can any tax prepare help them with this, or is this like a specialty that?
So I would say that if you are going to claim the R&D credit, I would go to somebody who. So first of all, I'd go to a CPA, and I would go to somebody who has done this, because they know they've hit the pitfalls already, right? You don't, like, if you're going to be learning together with somebody, like, make that be your spouse or like your best friend. I wouldn't pay somebody that's never done it before to do it.
For sure.
Yeah, that's my opinion.
Okay, awesome. Well, anything else before we wrap up our episode for today?
No, I just want everybody to take this information and to see how it applies in your life, because I know we have some really innovative people. And you know who I really want to start looking into it? I want hairstylists to look into it, because the things that I've seen people, hairstylists, those lash people, the people that develop, like, even if you're developing serums, like, I've seen all of these businesses pop up, and I just want everybody to take the information. This is why I'm giving the free information, at least starting point, so that you can take advantage of this. Not even for the tax credit. Yes, for the tax credit, but the change to the world that you're making by, developing this product, you don't even know the impact that it's going to have in 10, 15 years. Right? Because you may just be starting the process, and then somebody is going to piggyback on your research and complete the process.
Exactly. So no matter how small your idea is, or how small your business is, or your product, definitely try to do your research in this tax credit and see if you can take advantage of it. I think that's a great point.
And think
I
big.
see that all the time on Instagram.
Yeah, think big. Like, do not, like, I'm a big thinker, right? But I also think I'm gonna win the lottery. But like, I think big. Like, you don't let anybody talk you out of it. Like, just the only thing. Your biggest hurdle, I think, is going to be yourself. The information is out there, but like, you have to get the proper people in place so that you can have the information given to you in a way that you can understand it, that makes sense, that doesn't make it feel like it's overwhelming.
Right. For sure. Awesome. Thank you. This was a very fun, interesting topic to cover, like we were kind of discussing before we went on air.
Yeah.
A lot of new things. Like you said, I was just thinking like research and development, like scientists, that's all I thought about. But now we learned that you can be in the apparel business and agriculture. even like hairstylist. So that's very awesome. So thank you so much for your expertise on this, Dionne.
Thank you, Dee.
Awesome. And thank you guys again so much for joining us for another episode of Tax Thursday. Make sure you are following us on all of our social media platforms. We are on Facebook, LinkedIn, and Instagram, and of course, YouTube. So like this video, leave a comment below, DM us with any questions if you do have any. And until next time, we'll see you guys next time.
Bye.
Thanks so much.
All right.